The day began with the U.S. stocks on the rise, investors cheered by the coordinated action of central banks, which had cut interest rates worldwide. By the end of the day, investors had lost confidence the move would restart stalled credit markets, and the Dow Jones Industrial Average fell more than 7%, dipping below the 9,000 mark for the first time in 5 years. Meanwhile, White House spokeswoman Dana Perino confirmed Thursday the government may buy shares in some of the nation's banks to calm global market turmoil. The U.S. bailout package adopted last week gives the administration that power.
This is a dynamic situation. We still have a volatile stock market, and Secretary Paulson is looking at all the different tools to figure out which ones should be used at what time and how robustly and how much money to put into each.
Meanwhile, as the world's economic leaders gathered at the International Monetary Fund in Washington, the IMF chief said the world is on the brink of a global recession.
The crisis is serious. The crisis is protracted. But nevertheless, we see that the end of 2009 will be the beginning of the recovery.
Dominique Strauss-Kahn says nations must work together to avert a global recession. Strauss-Kahn says the IMF also activated an emergency program allowing the fund to provide loans more easily to emerging countries in economic distress. Also in Washington, World Bank President Robert Zoellick said those countries must not be forgotten, especially as food and fuel costs rise.
The poorest cannot be asked to pay the biggest price. For the poor, the cost of crisis can be lifelong.
In New York, Thursday's sharp drop was the 7th consecutive day of losses. Meanwhile, in Europe, where stocks had posted gains earlier in the day, the continent's markets declined by as much as 2.5%. Robert Raffaele, VOA News.